Good afternoon, everyone. This is Forex Breezio. It's 2:20 p.m. on Thursday, November 4th, 2021. Hope you're doing well. And seems like I do this every time, but I apologize about my absence on recording. You know, it's kind of funny. I know that putting a lot of content on YouTube is how you help your channel grow and YouTube algorithms and such. But as I've said before, I'm not looking to monetize my YouTube channel or make money on it in any way, and I'm never trying to sell anything on here, so it doesn't really matter that much to me. I know I only have a couple hundred subscribers, and that's perfectly fine. If I can help out a handful, I will do so. And hopefully you guys can just like the video. As I've always said, just before you do anything else, hit that like button, subscribe to the channel if you haven't done so already. That would be helpful. And share the content, do whatever you can to help me out. But like I said, I don't make content unless I feel like I have something that I really want to share, just for the sake of doing it. So anyways, that's again why I've been a little absent in making videos, but I've actually been wanting to make this one for a couple of days, so let's get into this. And so once again, guys, this is basically a moving average type video, and I know I've made a bunch and I've gone back and forth between trend lines and moving averages, and I think depending what your preference is, they're both good technical options to use. This one's slightly different than some of the other ones that I've made, but not entirely different. But again, it's a good basic strategy. You can see the chart is pretty clean, and I'll go over what we're looking at here and just show you a couple of examples. So first thing is, you can use this on any time frame. What you're looking at is a 15-minute time frame of the Canadian Swiss, but you can do this on any time frame. And again, this comes in, guys, of using higher time frame analysis. So in other words, if you're looking for an entry on in this case, a 15-minute chart, that you want to look for what the trend is doing on, say, the 1 to 4 hour chart. And I always say to go at least 4 to 6 times higher than your entry time frame. So if you're on a 15-minute chart, obviously 4 times that is an hour, and you could go up to the 4 hour, I suppose. And if you use a platform that has in between time frames, then of course you could do a 1 hour, 2 hour, 3 hour, whatever. So, but this is MetaTrader 4, and just for this ease of simplicity, we'll just say the 1 or 4 hour. Okay, so, and again, you can do this on any time frame. I certainly don't recommend anything under a 15-minute. It really just depends what your type of trading is. Are you a day trader? Then the 15 minutes probably fine. I wouldn't recommend anything shorter. If you don't have a lot of time, or you don't want to spend a lot of time in front of your screen, which is an admirable goal, because the longer you sit there and look at your screen, the more you're probably going to take trades that really are not there. But again, for a day trader, this is a good time frame for an entry. If you're going to be in and out probably the same day, or maybe hold it one day. And then if you're looking to swing trade, hold your trades for at least a few days, then you probably want to look for an entry around, the 1 hour. And then if you're going to be more of a position trader, then you'd be probably looking at entries at, say, the 4 hour chart and higher. And again, you just go up accordingly in terms of your entry time frame versus your analysis time frame. And we're basically just looking for trend confirmations, okay? And we're trying to avoid ranging markets. And look, like I said, I've said this a gazillion times, there is absolutely no perfect system, and this is this is no exception. You're going to have times when you're going to lose trades. You're going to have times when you'll miss a good trade using this, but overall it's pretty good. And you can tweak this a little bit depending how you want. Just use it for you can just tweak these however you want, but I would recommend just starting with this with these settings, and then you can go from there depending on what your tolerance levels are. But I found this is pretty good. And as you can see, guys, the only thing on my chart is there's 3 moving averages, which I'll cover. There's nothing at the bottom. I don't have any oscillators or any other indicators down here. So again, I like to be able to get a nice view of the price action, and the more stuff you put on your charts, the less you get. And actually on this short time frame, I technically don't even need this long time frame, but I have it on there anyways. You really only need these other two. So let's review what's on the chart first. So this yellow line, these are all exponential moving averages. So this is the 200 period. Okay, I'll bring it up. Actually, I'm sorry. This is a... Oh boy, I need to update this template, don't I? Yes. Hold on one second, guys. All right, guys, sorry about that. Okay, so what you're looking at here is three moving averages. So the yellow one is a 200 period simple. I know I said a second ago they're all exponential, but I found that the exponential can be a little, even though the exponential technically is a faster indicator than the simple, since the simple is slower to react, it's going to still give you a broader perspective on the long-term trend than an exponential. So, and you can play around with it. You can see what I mean if you change it to exponential, especially on these short time frames. On a longer time frame, might not make that much difference, but on the short time frame, especially the 15-minute, which is where a lot of these entries will happen, you're better off leaving it as a simple. Okay? So anyway, so you've got a 200 simple, okay, and that's this yellow line right here, okay? And then these other two, this one is a 10 period exponential, okay? I'll bring it up here. 10 period exponential. And you can see I changed the shift. Now this normally defaults to 0. I changed it to -3. What that does is it walks the moving average back 3 candles, okay? So it's basically displaces it to the left 3 candles, -3. Now you could do -20, -30, +3, whatever. You could leave it at 0. That probably is okay too. I find that it gives you a little bit earlier entry without giving you a false entry, any false entry. So 10 period exponential, change the shift to -3, and this is what you'll get. That's this blue line, okay? And of course you can use whatever colors or line thicknesses you want. All right, so 10 period exponential -3, and then the last one, which is this tomato colored one, this is a 50 period exponential, okay, same as the 10 exponential, only this one I just left the shift at 0. Okay, so this one just left right at 0. Okay, this is obviously a longer one than the 10 period. The 10 is really kind of your entry moving average, so that's the why I shifted it. You could change this one to a -3 shift, but I don't think it really buys you all that much. If we change it here to -3, and we look at this, it doesn't really shift this very much. So I just find leaving this at 0 is perfectly fine. So I'm going to change it back to 0. Okay, all right. So those are your two three moving averages. Okay, and again, nothing at the bottom. If you have an oscillator or something you like to use, you can add it on here, but I don't find that it's necessary. So the entries are really simple, guys. Basically, what you're doing here is you're going to confirm. In this case, is a 15-minute chart. You could go up to your 1-hour chart and say, okay, where's the trend? And clearly you can see the trend is down, okay, basically because we're underneath this 200 period moving average, everything is definitely down. All right, so this is my kind of my analysis time frame. And then so I go down to the 15-minute, and this is what the type of thing I'm looking for, these nice pullbacks, okay, that will breach the 200 period on the 15-minute chart. Okay, now these are all entry points in here too along the trend, but if you want a really nice low risk high reward type, wait for it to pull back where the price actually breaches the 200 period and starts going up, like right here. And then your entry signal, and again this is the 15-minute, so your entry signal is going to be when the 10 period crosses back below the 50. Okay, so in this case it would basically be right here. This is your entry. And so you could put your stop right, I mean you could put your entry anywhere in here, put your stop, up above this this swing high, in which case, let's see, that would be about a 40 pip, in this case about 37 pip stop loss, which is reasonable. Gives you enough room for a little bit of a pullback, a little liquidity run, at market changeover. I mean, you definitely don't want these stop losses being too small, because you'll very likely will get stopped out. I would say Depending on what pair you're talking about, I would say you should be looking at a minimum of a 10 pip stop loss. More than 20 is probably better. In this case, it's almost, it's 30 plus, so that's perfectly fine. So this would be your entry. Stop above the swing and then just let it go. Now, again, I said you don't really need the 200 on here, and you really don't, because this is more just for the higher time frame, but just for the sake of visualization, I left it on here. Again, really what you're looking at is just the 10 period and the 50 period cross, okay? And again, this is a 10 period exponential with a -3 shift. This is a 50 period exponential with no shift. And this is a 200 period simple, okay? And that's basically what the setup is. And again, guys, you can do this on any time frame, okay? But I find that the 15-minute with the 1 hour analysis, maybe a 4 hour, is great for some day trading setups, and you can get some good setups. Now you'll find a lot of times. So you can see what happens a lot of times here. This move up here happened during the early Asian session. So you do find that a lot of times the Asian session is counter trend to the longer term trend. So this is a good time to analyze your price action, guys, is during the Asian session, okay? And in this case, you actually got the entry during the Asian session. This was 5 o'clock, so that would be around 10 p.m. Eastern time. So this is about 5 hours into the Asian session and about 5 hours before the London Open. So in this case, you actually got an entry here during the Asian session. But at the very least, guys, if I'm going to go and look for these type of setups, I'm going to analyze my charts sometime during the night, in my case during the Asian session, and look for these setups on the 15-minute, and maybe put some kind of price alert in here or whatever. In this case, I probably would have, if I was looking, or if I'd set a price alert, I actually could have gotten into this trade during the Asian session, because you can see what happened. It went down and it just kept going, even right through into the New York session today, and now we're kind of consolidating here. But if you had gotten in, say at this point, let's say at the close of this candle, and you held it all the way down here, it's 192 pips in 49 candles. So 49 15-minute candles, that's 49, 50 divided by 4, that's like less than a day. This is like 20 hours or so. So in less than one day, that's 192 pips on this pound versus the dollar. So all right, so that's the basic setup here, guys. So this is the pound yen, looks just like the pound dollar, same setup, 15-minute chart. And again, guys, I would say, let me put a box around this retracement area right here. So here we are on the 15-minute. Here's this retracement area, right, where price breaches back above the 200. And if we go out to the 1 hour chart, we can see this also coincided with the 200 period moving average on the 1 hour chart, and sometimes it will, and this is great because the 200 acts as a great area of support or resistance. But you can see we maintained the downtrend, and as soon as it hit here, it went right back down. And so in this case, again, you're going to wait for the 10 period across the 50. So depending on how aggressive you are, that either happened right here or right here. It's pretty much all the same. So you put your entry would be somewhere in this area, maybe at the close of this big engulfing red candle here, and you put your stop above this swing, in which case that would be about a 47 pip stop loss, more than enough to give you some breathing room, and then boom, you could just see it went straight down. Okay, now the biggest pitfall, and that's good for 250 pips, again in about 1 day. Now the biggest thing that hurts this kind of methodology, regardless of what type of moving averages you use, what length, whatever, what time frame. The biggest killer here is sideways markets. So you really want to make sure you're dealing with a clear trend on the higher time frame, because if it's moving sideways and it's choppy, or you get a disagreement, in other words, it looks like a bearish setup on the 15 minute, but you go to the 1 hour and the 1 hour is technically bullish, just don't even trade those. And I think dollar yen might be an example of that. Let me just look at dollar yen. So let's see. You can see dollar yen is very choppy and sideways. So this is really the biggest problem with it. Here's the 1 hour chart. It's just a mess. I mean, the moving averages are just in and out of the price here. The 200 period is moving sideways. This is just not a pair I would trade, even though on the 15 minute, you know, there's technically an entry here. It's not really that good. If we put a box around this entry and go to the 1 hour, so here's your conflict, right? So you go down here to the 15 minutes, this looks like a bearish entry right here, right? We have price come up. Here's the crossover right here, but you look at the same area on the 1 hour, and you can see price is above the 200 period moving average. So I would just ignore this entry. So even though there's, even though it's you know, it looks good on the 15 minute, it is above the 200 period here on the 1 hour. So this is one that I would skip, even though again it did go down, and technically I guess you could have pulled about 45 pips out of this down to this low, but you can see it's just chopping around. So make sure there's a clear trend on your analysis time frame, in this case the 1 hour, and make sure it's in agreement with your 15 minute entry. Okay, so if you're looking for a bearish setup, a short entry, make sure that the 1 hour is showing, you know, that it's in a downtrend, and in this case it is definitely not. Okay, so that's really important, guys. Okay, and I can just keep showing you these. This is the euro yen. Again, here's your move higher. Okay, we'll just put a box around here. Here's your entry point right here. If we go to the 1 hour and look at this on the 1 hour, okay, so here's another. Okay, so let's go back to the 15 minute and let's actually put a, so your entry is actually right at the cross of these two moving averages. So right here is your entry, and on the 1 hour there's technically still in an uptrend. So this is another one you probably wouldn't have taken, and it looks a lot like the dollar yen, where it's kind of moving sideways. And again, this is, you know, I just want to be honest, guys, these are ones sometimes where you're going to miss them. This actually turned out to be a pretty good trade. You probably could have taken it and picked up 100 pips, but if you want to follow the rules closely, this is probably one you would have just skipped, just because of the fact that the 1 hour was not confirming the downtrend. Okay, now it appears it's in a downtrend. So if this downtrend continues, okay, now that this is maybe established as a little bit of a downtrend on the hourly chart, now going forward you can look for these pullbacks on the 15 minute back up above the 200, and then look for re-entry. So you may have missed this first leg, but if this is going to continue, what'll happen now is at some point price is going to rally back through this 200, will swing down here, we'll get a rally back through the 200, and then you can look for a short entry, you know, wherever that ends up happening. So again, guys, you might miss these initially when there's either a sideways market or you're in a transition from a long to a short position, or vice versa, from short to long. But if those trends are going to be sustained, then you will always have another opportunity to enter the trend. Okay, but I just wanted to show you a couple of examples where maybe you know, you would not have taken the trend following the rule, and that's going to happen. Okay, but better off to miss one than to just to take bad trades, you know, in a choppy market that you end up just getting whipsawed out of, and it, you know, you just take an unnecessary loss, you know, for no reason. All right, so I'm not going to beat a dead horse in this, guys. I've been going almost 20 minutes, so I'm going to wrap this up, trying to keep these videos as short as possible. So again, simple strategy, guys, and again, you can use it on any time frame combination. Just make sure that your entry time, that, you know, whatever you pick for an entry time frame, in this case the 15 minute you're seeing, that you go 4 to 6 times higher than that for your analysis time frame, which in this case would be at least the 1 hour, you know, the 1 to 2 hour time frame from a 15 minute chart. Okay, and then just look for these nice pullbacks over the 200, and then as soon as you get the 10 crossing back through the 50, that is, you know, especially if it's a nice engulfing candle, is really sweet. and that would be your entry, and then stop above that recent swing just in case you're wrong and it keeps going up, and then you'd be out, and that's it. And then just let it ride down to, this is beyond the scope of this video in terms of how long to let this go. There's a million different ways to pick targets and take profit and exit levels, but that's beyond the scope of this video. So anyways, I will leave it there, guys. I hope you enjoyed it. Again, please smash that like button if you do nothing else. Subscribe to the channel. Hit the bell notification icon so you do get notified when I make a new video, which again is usually no more than once a week. And I hope you enjoyed it. Please leave comments, questions, concerns in the comment section below. And if there's anything else you want me to cover, leave it in there. If I'm comfortable with it, if I feel like I can contribute something to that, I certainly will cover it in a future video. All right. Hope you guys have a great rest of the day, and we'll talk to you soon.